So after broadly understanding the significance of the candlesticks and the candlestick patterns, let us try and understand some technical indicators for the technical analysis. Now the first question which will come to your mind is where to find the technical indicators. You see, you can get the technical indicators from any good financial website or the website of your broker or the depository participant, or there are so many websites which will give you the technical indicators. All those websites which illustrate the stock charts, they will also give you the technical indicators. I personally follow this one, investing.com. in.investing.com is in India, but if you are in the USA, then you can go to the USA website of investing.com. If you are in Canada, then you can go to ca.investing.com. Similarly, for UK, there is the UK website. For Singapore, there is the Singapore website of investing.com. So let us go to investing.com. So being in India, you come to the site in.investing.com. If you are in the US, then accordingly you go to the US website. If you are in Canada, then you go to ca.investing.com. In the United Kingdom, you go to uk.investing.com. Accordingly, in Singapore, you go to the Singapore site. All right. Now coming back to the Indian site, since we are in India, the moment we open this site and in this, the box, the moment I put the symbol of the stock, I have put here SIEM, which is for the Siemens Limited, then we get this basic candlestick chart over here. All right. Then there are various things. You can see this chart on a 5 minutes interval. You can see it on a 15-minute interval, 1 hour interval, 1 day interval, 1 month, or any other format which you want. Then there are various other facilities. We will not go into those details. Now looking for the indicators, when you go here, see this, some indicator is made here. Can you see this? The moment you click here, you get a drop down menu and there are various indicators which are shown here. You can select any of them. Like for example, let us select on balance volume. The moment I click here, that indicator will come below this candlestick graph. All right, what you see here, this portion, this is the on balance volume indicator. What it is, how to read it, we will discuss in a moment. But at the moment, I'm just trying to explain to you how the indicator will come in front of you. Now, if you want to have one more indicator below this, then again you can go here, click on this, go to the drop down menu. Let us select one more. Which one do we select now? Let us select probably MACD, that is moving average convergence divergence. The moment I click this, this also will come below the first indicator. So now you have the candlestick chart in front of you and you have two indicators below that. You can study that now. If you want to add one more indicator, you can add one more below that, or as many as you want, you can add. But the more you add, the more confusing it will become. If you want to change anything, you want to remove this indicator, just click here and the indicator will be removed. So now you have got only one left, that is MACD. You can study MACD in relation to this candlestick chart which you see here. All right. Now the issue is that when you click this, there are about 79 indicators which are shown here. And it is practically impossible for any human being to study or track 79 indicators at a time. The problem is not only that. The problem is that one indicator might tell you that the price is likely to move up, and the other indicator may tell you that the price is likely to go down. So what do you do in such a case? So we have to remember that technical indicators are not the nature's law. They are just probabilities and theories which have been documented by great people in the past, people who have studied the stock market. They have done a lot of research, and based on their understanding of the stock market, they have documented certain facts, that how the market behaves, and they have given the technical indicators to the world. Now you see, what I'm trying to say is, for example, when you say an apple falling from a branch, when an apple breaks from a branch, the apple will fall down to the ground. That is the law of nature. Newton has noticed that, and he passed it to the world. Now there are no two ways about it. An apple falling from the branch or breaking out from the branch has to come to the ground. It can never go up into the sky. Alright? But that is not the case with technical indicators. These technical indicators are just theories and possibilities documented by learned people. They are not the law of nature. You see, a technical indicator may say that the price will go up, but the stock market is not bound to obey that. This indication that the price will go up is only based on the experience of the person who has formulated that indicator, based on his research and study, and he has given it to the world to follow. All right. Based on his study or her study, whatever it is, the price may go up more number of times, then it may come down. When the indicator says that the price is likely to go up, it only means that the probability or the chances of the price going up are more than the price coming down. And similarly, when an indicator says that the price is likely to come down, it only means that the probability of coming down is more than the probability of going up. And therefore, as I have told you earlier, out of those 79 or 80 indicators, all of them will never say the same thing. Some indicators will say the price is likely to go up, some will say the price is likely to go down, some will remain neutral. So based upon your experience, your learning, your wisdom, you have to choose a few indicators and then follow them with some rationality. All right. So in the next lesson, we shall try and understand a few of the indicators.